Okay, good morning. So July 23rd, quick webinar on how to use Epic the Oil algorithm. We've done a number of them now that are available, pardon me, on our website, um, on our YouTube channel. To get to our YouTube channel, you can either go to our website at compoundtrading.com or you can go to my personal Twitter feed, and the YouTube channel is right here. So because there are a number of them already, I'm going to make this one as quick and efficient as possible. So this is our website, compoundtrading.com. We explain here that we're developing algorithm models to be coded. Well, first tested and then coded for an intelligent assistant platform, and then eventually for HFT. These are not models that would be your standard Python type models. These models follow a development process that if you hover over about algorithm development process um, and click on this video here, this will give you an idea of the development process. Everything about what we do is on our website and how it came to be. We do have traditional day trading, swing trading, an investment pool, and various other services. But this is specific to Epic, the oil algorithm. Our pricing for our services are on the subscription menu, and they're all listed for the different platforms. There is a significant price increase coming September 1, and then a number of them between September 1 and January 1. And existing members will be able to, as long as their memberships don't lapse, continue on at the current pricing. A lot of folks do ask me why the prices are continuously going up, and that's just because there is a cost to developing the models. And of course, our early adopters get the benefit of not having the price increases. And the other part of it is, and the truth is that retail has been slow to take it up. The institutional side has embraced it full-fledged. So, you know, the folks in retail that are going to take it up, they get the benefit of it. And the institutional side is quite frankly, funding the development at this point, and we've got to honor that. So it's a way of honoring both sides, I guess. To find Epic's reporting, you hover over blog, over algorithmic charting reports, click on Epic. You'll find the first few are locked to honor our members and our agreements. But we do unlock historical, so May 30th is the one that's most recently unlocked. And then if you scroll down a little bit, you'll find where we explain to our members in the report how to trade the actual model. You can also find Epic, by the way, on Epic the Oil Algo or Epic the Algo on Twitter, and a number of different resources are listed on there. If you have any questions, I am in our Discord channel, which can be found on my Twitter feed by clicking here. And if you would have any questions and want to ask by voice, you can do that in there, or you can just do it by way of a question in here. Now, I did miss Rob's question on the last, and I apologize for that. The monitors that I watch are a little bit delayed. I'm in the Caribbean, and the upload and download time is, yeah, that's just the way it is. Okay, so the oil chart, basically the way that it works is, so if we go to the oil newsletter that our members get, it lists out the most predictable ways that these models are traded. Now understand that these are algorithmic models, which means they are not conventional charting, which also means that they are produced in advance instead of as trade happens or after trade happens. So conventional charting, would represent a channel, for example. After trade happens, we represent that channel in advance of it. So think of it like a GPS, not so much a crystal ball, but GPS. So in this instance, this would be the top of the channel, this would be the bottom of the channel, as an example. Now, going to the newsletter. Most predictable trade is significant resistance cluster overhead, blah, blah, blah. Our members knew where that cluster was because in historical reports, if you go back, you'll see we were warning our members for many weeks where that cluster is. So that's the most predictable area of trade. It is not represented on this chart because that was back on May 30th. And you would have to go back into Epic's reports to see, because the charting is actually produced too in the reports, and you can see where that cluster was. That's the most predictable area of trade, and our traders, of course, I think pretty much all of them banked on that. When they come, they are 99.some% predictable. Next most predictable trade, wide trading range, primary resistance and support, tells them exactly where they are. Now this is back on May 30th, so they've changed. But in most recent trade, so these wide area trading ranges, this was the resistance 47, 45-ish in recent trade. Support was a fair bit farther below. And as trade went up to that resistance, our traders knew that there was a very high probability, it's in the 93% range, that trade would fail there. And it got just up and over, it popped over, and that's typical in the markets where the markets will overshoot, especially wider ranges. And trade came off dramatically, and our members, of course, did very well on the short side of that. So that's these gray lines here. Those are represented as a wide trading range. So back on May 30th, this was the trading range. Most recent, a little different. Next most predictable trade, support and resistance of channels. So the channels are represented on the charting. This is the top of the channel. This is the bottom of the channel. This is the midline of the channel right here. So if you go back and trade a little bit and take a look, you'll see how trade respected the top of the channel. It came off, came back to the bottom area of the channel, came up, and continued through its channel. But the most important part to remember here is that this is all produced in advance for our traders. Now, recently it did fail the channel right here, and you can see how volatile things get when the channel fails. Now, our traders knew there was an extremely high probability of that happening, simply because they knew that this was their trading range resistance. So that was a pretty obvious failure at that channel. The next most predictable, now this is really 2 points instead of one. I don't know why it was written this way, but next most predictable trade support resistance of the 30-minute quadrants and the Fibonacci support and resistance. So the Fibonacci support and resistance are these horizontal lines here. The more thick they are, the more important they are, and they're all over the charting. The only ones that are not Fibonacci conventional support and resistance are the purple ones. Those are historical support and resistance that have proven out, those purple ones there, and this yellow one that you see up here. Those are not Fibonacci. The rest of them are Fibonacci support and resistance. The quadrants that it's referring to, the trading quadrants are, if you can picture this as a baseball diamond, second base, home base, first base, or sorry, second base, third base, home base, first base. That's funny. I've made that mistake a number of times. I don't know what's wrong with me there. That's a 30-minute quadrant. That quadrant is a trading range in that it is support and resistance area, and it's broken up into 4 smaller quadrants. So when trade is bouncing in between, our traders just use it as support and resistance. But more than that, there's indications of where trade is going to get volatile inside of quadrants. And I'm not going to explain every detail of that. That's explained with our traders live in the trading room, and it reports, et cetera, et cetera. But those quadrants become invaluable. There's no way I could trade oil without those quadrants now, once you understand how to use them. But it comes down to every line on this chart is support and resistance. It's just a matter of understanding how to use them. Like you can see these Fibonacci, how it bounced in between, et cetera, et cetera. As it gets closer, by the way, as trade gets closer to a supporter, major supporter resistance, it becomes more volatile, and the support and resistance starts to break down, and you can see how that happened here. Okay, the other way, last trade signal we use are the time and price targets. Now, these sometimes are predictable and sometimes aren't, and we let our traders know in advance if they are or are not. When oil is in a significant uptrend for a period of time or a significant downtrend for a period of time, these targets become almost 100% reliable. They're produced on Sunday, for Tuesday at 4:30, Wednesday at 10:30, and Friday at 1 o'clock. So these vertical lines represent them, and you can see down here. So this is Tuesday at 4:30, Wednesday at 10:30. Now that line's actually moved, and that happens. It says 1:30, but it's really for Friday at 1 o'clock. And that's surrounding, of course, the oil reports. When a trade is predictable in a trend, these targets become near 100% predictable. So on Sunday, we produce them for our members, and they know where the price of oil is going to be Tuesday at 4:30, Wednesday at 10:30, and Friday at 1. Now, the balance to that is that they can be very unpredictable, and of course we provide that probability to our traders on the Sunday, whether or not they are currently predictable or unpredictable. So when they're unpredictable, it's more of just I call it fun, but you can see in recent trade how last Tuesday the top of that wick got right into this target, but not right into the middle, but within a few cents of the middle for that exact time and cent. Then on Wednesday, got very close to the middle of the target, within a trading area that's would be considered a fantastic call, considering when these come out. And then on Friday, the Friday target we didn't expect to hit at all, because trade was going to be near resistance, and things don't trade isn't as predictable around major resistance and support. Things get volatile, so we didn't expect that one to hit. It was close, actually. Trade was on its way there, but anyway, once it hit the major resistance, trade fell off hard, and it tried to recover in here, and then it fell off hard again. Actually, it was going for, you can see the trajectory towards the target. Then it fell off, and it fell all the way down to the channel support, fell off, which became a very predictable trade for our traders all the way through. And then it hit the bottom target. So we produced two targets for Tuesday, Wednesday, and Friday, and it nailed the bottom target. So it came way off in dramatic style and nailed that target. In my opinion, for what I do in modeling, that was pretty amazing. But the average person that doesn't do this may not completely understand how absolutely awesome that was. So that's really how it's traded. So then the question is, for me as a trader, what do I do when I use Epic? Well, that's your resistance, right? Right. Okay. So now you're short bias. Okay. So now I'm short bias. And I'm getting my new report. Yes, you get your new report on Sunday, and it's going to have a series of these targets. Oh, okay. So I know generally the direction. Yes. I know that I'm short bias. Yes. Do I have a trading range? Yes, you have a trading range between the two gray lines, a wide trading range. So where am I in that trading range? Okay, I'm going towards that. And then here's the channel it's in. And we provide that. So that tells you, okay, short at the top of the channel, long at the bottom of the channel, depending on the direction the channel's going in. The other one is the intraday quadrants. So that provides short-term, longer-term, wider frame, and tight frame trading probabilities for our traders. Quite frankly, without it, there's no way I could trade oil. If you look at my feed or Epic's feed, you'll see that my win rate on oil is it's well over 90%. And some of our traders now have done much better than I do. I'm not a real skilled trader. I'm more skilled in terms of as a technician than I am as a trader. But I'm still, I'm above average trader and I do well with it. I base hit most of the time. Some of our traders are getting home runs consistently. I actually would have nailed this short, but I was sick on Friday, which was unusual for me. So again, real quick, Epic has its own Twitter feed, Epic the Algo. The charting is available by newsletter or in the live trading room and we've got alerts too. We have an alerts feed for members. Our website, compoundtrading.com. Our development process is all here, and the discipline that we follow is here. Our pricing is all on the website under subscription menu, overview and features, all of our different pricing. And over the next few days, there will be new pricing announced for September 1. I think there's increases coming September, October, November, December, and January 1. And by the time we get to January, I think we'll pretty much be out of reach of the average retail investor. And that, again, is just a result of the fact that it does cost money to develop these algorithms, and the institutional category has taken it up much quicker than retail has. But we're still giving our retail members an opportunity and giving lots of warning for that. And our existing members, we don't increase the price on. So we believe we're being fair on both sides. Institutional, of course, is encouraging us toward a different path than retail. And we think that we can manage supporting both. And so that's what we're trying to do. That's our balance. As far as the historical reports, you just hover over blog, over charting reports, and you can find them there. And the YouTube channel, of course, and then our free chat is the Discord channel that you can find either on my feed, my Twitter feed. All of this, of course, is available on our website. So that's Epic the Oil algorithm in short. And I went quick there and I went short because on our YouTube channel there are many videos now. And these are raw videos, by the way. They're not packaged Hollywood videos. They're very raw. Somebody that wants to learn the discipline or use or find out about us, unfortunately, is just going to have to do some homework. And the average person that dug in here and has come out the other side has told me, I figure it's about 5 hours of work to find out if we're actually a quantifiable, verifiable resource for the market, an edge, if you want to put it that way, for traders. You have to do some homework. It's not a 30-second drive through. Yeah, that's about it. So if there's any questions, I'll take them. So in the chat box, you can put questions in there if you have any, or in the public Discord lounge, you can ask any by voice, and it doesn't look like we're going to get any. Okay, so it doesn't look like there's any questions. Have a great day, and thanks for coming out.